Hi, it's Bill Gross, the LA probate expert, and mortgage rates continue to hit recent historic highs. And as a result, the housing market is going to crash, not going to crash. Let's take a look at that and go into the detail, into the data. Now, as you know, as I say on this call almost every single week, I think the real estate industry news is worse than the regular news or the political news in terms of the headlines have little or no bearing on the real data. They're just giving you a story, whether or not it's true or not. I'm going to break into the data. Now, what is undeniable as you look at mortgage interest rates this year, anybody can look at this graph. There's nothing to hide. And which way is it going? It's going straight up. Now, it's not going straight up in the sense it's 1% per day or week. It's not dropping with the same intensity rising with the same intensity the stock market's dropping. But what you can see an undeniable pattern starting this year, right? And it continued again this week. It seems almost every week we end up at a new high for the year. And in this case, these are the highest interest rates since 2009. Okay? So undeniable that's going on. Interest rates are going up. And as a result, the housing market is, well, continuing unabated. I mean, really, when you look at the end of the day, the statistics will tell you, the data will tell you that the market has not slowed down as a result of all these numbers. Let's take a look at the data. When we go to the driving force, I think, which is inventory, you can see that in 2002, it's still lower than last year. There's less homes for sale than a year ago. There can't be a crash or a crisis without too many homes, and there's almost 28% less homes than last year, almost 50% less than 2 years ago, way less than 2019, 3 years ago. So you can see that the inventory is below these last 3 or 4 even record years of low inventory. So clearly, inventory is not rising at all. In fact, with the rates of late, you can see the trend has still been less inventory, not even slightly up, not even doubling as it would have to be or tripling to start to affect the value of the property. New listings, you can see it's got a little hidden here. Other than 2020, which again, this was a pandemic year, so this was kind of unusual at the time. But other than that, it's the lowest year on record, and it's less than last year by 15%. But it is more than 2 years ago by 50%. But you can see in the historical chart, it's in the middle at best or below all years but the 2020 pandemic year. Sales in a contract, it's again almost the same as last year's record sales, about ready to bust through. And significantly more than the last couple of years, which were record years as well. Take a look at solds overall, and you'll see solds, though, are down 25% from a year ago. Up almost double, though, from 2 years ago. If you look at the actual sales, they're very healthy numbers compared to historical numbers. So the most important thing about going forward would be how many houses are for sale. And you can see not only is the inventory low, but it's declining. So what does that mean going forward? Well, hard to say. But what I can tell you is there's no sign yet of a crash or a crisis, even with higher rates, even with higher prices. That said, you're going to hear in the news a nonstop drumbeat of news predicting collapse and disasters. And let me give you an example of one of those I found to be particularly bad. Here's Fortune magazine, right? High-end magazine. We're in a historically overvalued housing market, and these cities could see a home prices drop of 10%. Ooh, that sounds like a lot. So if you have a house at $800,000, your house might go down to, say, $720,000, 10% off of that number. Well, they don't tell you, but you have to dig into the details that really they're talking about maybe 5% to 10% of all counties in the country might go down. At the same time, more than that are going to go up. And on average, they're projecting an increase over the next year of 5%. So they're not predicting a 10% drop of the market. They're saying a small minority of the market will go down 10%. More than that will go up by more than 10%. And overall, the average is 5%. Is that bad news? I don't think that's bad news. I think they're trying to take what otherwise is good news and try to frame it as bad news. Let me give you another example, I think, of where the news industry is trying to exaggerate something that's not there. Now, this is Redfin. And of course, they're based on educating their buyers and being a source of, and they have really good data. This one surprised me that they would do this. Americans are buying smaller homes as prices skyrocket. Now, you read this and you think, oh my gosh, people are buying small little houses. And they're doing that maybe because prices skyrocket. Is that true? Well, let's take a look at the data that they provide. You can see that this year, the average home is 1,720 square feet versus last year, there were 1,751 square feet, or the year before that, there were 1,751 square feet. I'm sorry, 1,791 2 years ago, 1,751 last year was the record, 1,791 during the height of the pandemic. But you can see that this year is, say, more than 2019 and only slightly less. When you talk about what's the difference, you're talking about 31 square feet. That's 6 by 6. You could maybe lay down in a square in a house and make a difference. Is that significant? Is that statistically significant? I would say not. But more importantly, why might we see this trend from the 2 years breaking, yet we're still buying bigger houses than 3 years ago? This trend started during the pandemic. People bought houses and said, well, I need now to have a home office. I'm one of those people. I have a home office now. Didn't have one pre-pandemic. I worked out of an office every day. Other people needed a home gym because they couldn't go to the gym and they wanted to work out and a place to put their bike or their treadmill or whatever, or weights. So they built gyms, and the number of homes with gyms has increased. The number of homes with home offices has increased. Now the pandemic is coming to an end, ended, whatever you want to say. Those pressing needs are less important. We're going back to a more normal history. So what's happened is the people who bought one extra room house, that demand's gone away, and now we're back to a more normal market. So are Americans buying smaller homes? Well, kind of, or maybe they're back to buying normal homes, back to pre-pandemic levels. They're buying a house appropriate for their lifestyle. Are homes skyrocketing? Is that related? I don't think it's related at all. Nobody's buying a smaller house because the price went up. They're buying the house they want, and the price for that house has gone up. So again, I think that this is deceptive, and I think they're trying to create a headline where there really isn't one. What's true? What's true is that interest rates have jumped up, undeniable. What's true is the market has maybe gone from red hot to still hot or red hot. That's true. Housing prices are still going up. Now, it might be inflation could be 10, 12, 15%, and houses only go up 5%. But if you're only putting 25% down, your investment equity is going to keep up with inflation by buying a home. Most investors, when they buy property, put down 25, 30%. They're borrowing the rest. And so the property goes up by 15% if that's where inflation goes. If we go into a high inflation period, then real estate will do really well despite all that. I do think we have to pay attention. I do think news can change. You know, things are very volatile in Russia and Ukraine and in China and around the world. And of course, if things change, then the market will change. But based on where we are now, what seems true is rates have gone up. The market seems to be somewhat unaffected by it and continues to be an opportunity for people. So what should you do? Well, it was time for you to sell. It's a good time to sell. Now, the bad news might be that now when you sell and go buy a new house, the loan rate you'd get is higher than it was 3-4 months ago. The good news is most people selling to buy down are paying cash or are getting a much smaller loan. So that's not so significant. So if it's a good time for you to sell, for you personally, it's a great time in the market. You'll get a lot of activity as long as you handle things properly. On the buy side, keep in mind, it's the payment over time that is important to you. And if rates go up, they tend to go down at some point. You might be able to refinance. The people who have houses today have refinanced in some cases 1, 2, 5, 10 times as rates came down each time, locking in a lower payment. So if you're buying a house to live in for 10, 20 years, you might see 2 or 3 chances to lower your rate. So I hope this helps you understand the market is still strong, very volatile. Pay attention. I'm here to help you. If I can help in any way, give me a call, text or email. I'm Bill Gross, the LA Probate Expert. And as always, make this day your best day ever. Thanks so much.